Let's bring in Steve Quirk, the Chief Brokerage Officer there. It's great to have you here. Welcome.
Thanks for having me, Kelly.
So, first of all, is this normal to see such high? Should we even allow it on some level, right? I know that in moments of geopolitical conflict, sometimes you don't want extra participants in there driving the price up. Or maybe in their case, you could argue they're helping. Maybe they're taking the other side of this. So what are you seeing exactly?
Well, I would say so the customers that have been entering into the oil complex or energy complex have been doing it on a couple fronts. Number one, on the futures side, and what that affords them is the ability to trade this on a weekend. So on a Sunday night, as this all unfolded, they're able to take advantage or protect the portfolio because they know what that price of oil jumping over 100 it does to a portfolio. So it's just a risk management
So it's
tool.
almost like they're buying crude to protect against their stocks going down.
Secondarily, the percentage of Robinhood customers that are participating in the energy sector, we can see it. It's like 1.5% of all trade in the ETFs or the single names was Robinhood. That's moved up to about 3%. So they're just either taking advantage of opportunities or hedging a portfolio in a way that was not possible in the past. Because of the hours.
It's a great point. Let's get into this larger discussion of whether they're underperforming. As you know, have they been underperforming lately, retail investors on your platform?
So if you look at, because there were a couple of conversations that were happening prior to this segment, and they were talking about the health of retail customers at large, and they were specifying Robinhood retail customers. And the way that they were looking at it was the AUM on a quarter-over-quarter basis. And our customers are very heavy into crypto. So as crypto has fallen, of course, the AUM has fallen as well.
Interesting.
Yeah. So if I looked at on a quarter-over-quarter basis, I would say, yes, they're probably underperforming
the S&P.
An S&P, which isn't crypto, right? However, if I go back and look over the course of 2 years or 3 years, which is the time horizon of most investors, is not a quarter. It's over a long period of time, especially if I'm a 20 or 30-year-old, which is what we have. They significantly outperform.
They've outperformed because of crypto and because of
crypto and just
stocks?
all the other investments that they've made that, have periods where they can be down for a quarter, but, over the long run, that's what they care about.
Which means, and this is a hard one to call, I don't think you and I are going to have the answer, but that a lot of what happens with them from here is going to depend on what happens with crypto. If it can resume outperformance.
Crypto and broad-based market, the most popular names, the software names, the Teslas, the NVIDIAs, everything that is very popular from a retail standpoint, those are the things when they see, those dip 40%, they jump in. Now, it worked out really well for them around the tariffs. They jumped into all those names and they significantly appreciated. And then they did some rotations into names that they thought underappreciated. But we shall see what happens.
No, that's exactly right. So it sounds like what you're saying is there's still tons of activity in kind of, I don't know if prediction markets are eating into anything that you'd see on the crypto side or in financial markets, or if that's more of kind of a sports and other areas kind of bet they're making.
I would consider it separate. There's like three in the futures market. We have about 48 contracts. Metals, energy, etc. Prediction markets much larger, but it's across a host of different areas. Sports being one of them, and we watch it. They aren't really delving into it's similar customers, but it's not really cannibalizing. Equity or crypto trading.
Do you ever think it'd get to the point where their activity in prediction markets would be so large? Because I assume on net they will lose money, not gain it. That's fine. But that it would contribute to chronic underperformance, in other words, if you looked back and said, well, if the only thing available, but maybe not. Maybe it's not that different from poorly timed trades or something like that.
No, I think that the way people use, other than some of the complex like sports, the way people use them is, hey, is the Fed going to lower rates? What's crypto pricing going to be? So they're using them sort of as a additive instrument. It's kind of like short-dated options. I can have more precision. I know Apple's reporting earnings on a Friday. I don't need insurance for a month when I know that this event is happening in a day. It's just giving them more precision to be instrumental in the way that they're hedging a portfolio or taking advantage of an opportunity.